Stream. Welcome to Coffee with Kristel on Thursday. Okay, it's open. Perfect. All right. So homemade coffee. Can you actually see it? This is a straight up cappuccino. Let's take a sip and welcome to Thursday. And it's a little bit of sweetener. Okay. So I have wait, did I have four stories? Yes. Four stories from this week that I would like to share with you. And in the end, at the end, as I've started to do, I will go a little bit more off script of mortgage and just allow myself to share whatever comes through. It's most likely about health, my personal health right now that I'm going through and elevating as I'm experiencing some blocks and challenges, but it's for a purpose. So, okay. So let's start first with some mortgage topics that I will share with you. The first one is the credit dispute. So, did you know that an open dispute on your credit report can actually block your mortgage? Even if you thought you were basically working on fixing the credits, right? You were credit agencies that say, let me dispute, let's go ahead and work on items and get them removed. So, I'm working with our clients, Leslie, and credit score is okay. It's fine for FHA. Often FHA minimum credit score will be 580. There are options below that. Excuse me, hers is over 600. But when I go deeper into the credit, I can find some disputed accounts. So it's okay to have disputed accounts, but those are open and active derogatory disputed accounts. So why does this really matter? If the account is derogatory, meaning it's a collection, it has late payment, or it's a charge off, and the total, not just that one account is disputed. That one, like in her case, she has two accounts that are disputed, and both together, separate, they're like 380, and the other one is 800 and some change. So together, they're over $1,000. Then very often we need to go ahead and get those disputes removed because the account is a collection. Now, once the dispute is lifted, the score may actually change because what it does is when a dispute is open, it freezes the scoring of this account, right? So when we lift it, now that account that's negative is now being calculated in the scoring system. So the FICO starts counting towards those negative again. So when people are working with credit repair companies, what I've often tell them is go ahead and complete that because you don't want to intervene and impact what they are working on. So that's the main tactic for a lot of the credit repair companies. But if it's an active account and you really want to move forward and you're not necessarily working with a credit agency, we will need to go ahead and stop the dispute. And there's a letter filled out, signed by the buyer, like Leslie signing, and we'll go ahead and request for the dispute to be completed, and the scoring system will then change. So the truth is not all disputes are a problem. Okay, we're talking about small ones that either are $1,000 or when they come together as disputed negative accounts together, they're over $1,000. So that's when it's a problem. Or but a medical bill, for instance, may actually be just fine because we don't look at medical bills the same way. So you really want to just get your credit pulled by a lender, not just one bureau, because that's what could happen too, is let's say Experian is reporting only that one collection, and then now you'll have we pull only TransUnion. So when we do soft pulls, very often we only get two credit scores. And let's say it's on that one score that's not being pulled, then you might have a surprise. So just know that's why hard inquiries, like going upfront with everything, is often the best route to have assurance that you'll be able to move forward with your mortgage. But if your credit is, of course, you don't have those concerns, a soft pull is totally fine. But just be careful with those. So timing is everything when you are getting under contract, where you are already under contract and you're coming to the table with a situation, we have to fix them, and we may have some impacts that are changing the terms of the loan. So have you, and let me actually say that when the loan it's over 600 credit score, and let's say now we are at 580, that doesn't mean we can't do the loan, but the terms, meaning the interest rate may be different. the price of the loan, meaning what it costs to actually do this loan with the interest rate, may be impacted. So that's where you want to get all of this done upfront before you go write a contract and go work with a lender. I would say like myself, where you know the details are being looked at when it comes to credit upfront. Now, if I'm in a situation where you're already under contract, I'll do my best to basically fix the situation and help you. But that's something to consider. Always start with, yes, you want to look at those homes, but get your credit taken care of first. So I'm super grateful for clients like Leslie to point this out for me. I mean, not her, but her scenario, her case study, so that I can share this with you. Because if you are currently working on credit repair, pay attention to those items. Let them know. You should probably know, the credit repair companies, that this will impact you, but be vigilant, be in the knowing for your credit. Okay, so that's scenario number one that I wanted to share, case study of credit and dispute. Now, because I talk fast, this is a way of me streaming my um pacing myself. So now we're going to go into another scenario that's now income. So we talked about credit. Now we're going to talk about income. So Rick just got a raise from 80,000. Actually, I think it was making about 75 to $90,000. And most people will think, well, that's amazing. Now he can buy a bigger home. But the truth is, Rick can buy right now. You're like, but why? He's making more money, Kristel. But let me tell you why more money doesn't always equal to more buying power. So in Rick's situation, he worked for, he still works in the logistics industry, but he's a W-2. He's been a W-2 for over 2 years, to not say longer. And he's making $75,000 to $80,000 a year. But then he had a great opportunity that came through with $90,000 a year. But that steady paycheck he was getting is no longer the case. He is currently on a 90-day probation of the job position. So the probation basically is, we're on hold. We don't know if you're going to be full-time employee. That's one thing. But the second part, they put him as probation, but also 1099, meaning they're not taking taxes from him. So he went from a W-2, we know what his salary would take in taxes, to now we 1099, which is basically cash income, less than 1 year. Same line of work, but less than 1 year. So he's now being paid as a contractor. Two things that are going against him right this moment is that he's on a probation period. So we don't know if he's going to really be hired. He's like, but Kristel, I make more money now. I'm like, yes, you do, but your job is not really quote unquote guaranteed. And then we don't know really what your exemptions are, or what your, I'm sorry, what your, because you're 1099, we look at it differently. We have to usually look at your tax returns when you're a 1099. So going from a W-2 to a 1099 makes it very difficult to qualify, mostly when you have less than 1 year as a 1099. There are programs, because I do have a program where in this particular scenario, I could do a program that's like a lease purchase, meaning there's an entity that will purchase the property while he works on his situation. But this is not a straight out buying this property. It's not traditional financing. So there are solutions, but if we're talking about just the scope of regular FHA conventional, even what we call non-QM, meaning outside the box, with him, I will most likely have to go more into a no income loan, knowing that the income is there, but I just can document it traditionally, which means the less you document, more money you need to put down. And as I said in the morning, that he also wants to do down payment assistance. He actually initially qualified for a grant, but the grant is a full documentation type loan, conventional, so can't offer that to him right now. So this is where lenders are strict about stability. Making a change on the job, sometimes can say, well, I'm about to make a change. It's like, well, you may want to do that before we get under contract. If you change enough from a 1099 to W-2, that is much easier because it's quicker to qualify and easier to qualify when you W-2. But you are still taking a risk. What if your letter actually says you are on a probation and even though you W-2? That means that you're not fully hired until you go through your probation period. So what Rick's actually going to be doing is finish his probation period, get moved over to a W-2 status, and then give us the offer letter with the first paycheck. Now, There are some nuances, some programs you can do certain things. I'm just talking in general here as far as needing at least the first paycheck before we close. And that's because the stability is not there in the midst of us closing. Well, he's not closing right, but him looking for a profit. So my real message is that if you're planning to buy and also planning to change jobs, talk to us. And I'm taking a deep breath because I also talked to him about this situation. But he was more interested in the fact that he was about to make more money and he thought he was going to fix it some way. And he did not really listen. So if a lender like myself with experience has told you, hold on, go ahead and buy your house first, same as we say, don't buy a car, take care of your priority. Obviously, the priority was more, let's me make more money first right now. And that's totally okay. But know that it can impact you. So you don't get stuck in a situation now, in his case, he's going to have to wait the 90 days or talk to his employer and see what else he can do. So money matters as far as making more money. The dollar amount helps him qualify. All the 1099 is different, but also the timing. He was already purchasing a home and the contract did not go through. So that means that he had the buying power. It just was a matter of being patient with the process. So my question to you is, have you or someone you've known changed jobs right either before buying a house or while they are under contract and they're supposed to close? I had another client who did this. He was actually working and he got laid off, but he did not tell me that the job stopped. And then when we did the final employment verification, he's like, "Well, I thought you told me it was approved." I said, "Yes, but I always said we get a final employment verification. So there's always having to verify at least 24 hours. Je pourrais pas parler, maman, je suis en live. So you always have 24 hours of employment that we have to verify before you close." So there's the coffee. Je suis juste en live, maman. Tu peux le prendre, mais je suis directement sur Facebook, là. Alors, tiens, tu m'as déjà fait m'arrêter sur mon Facebook.
Elle m'a dit de l'attestation, de vérifier tu as l'attestation.
So give me 1 second as we are Facebook Live, but then seems like an emergency. Je peux pas arrêter l'appel que je fais, maman. Je suis directement sur Facebook. Mhm. Tu veux quoi?
Elle a dit qu'elle t'a envoyé l'attestation tout de suite hier.
Elle est au téléphone, maman. Elle est au téléphone, non?
Oui.
Je cherche de qui?
Hein?
Je cherche de qui?
L'école, Pacifica. Bonjour.
Non, je n'ai pas de message. Je peux terminer et je n'ai pas de message.
Voici l'attestation.
All right. So guys, thank you so much. Not everyone understand what that means to be live and still be interrupted. Okay, now I want to step into the next one, which is the DSCR law. So I have two scenarios to share with you on the DSCR. The first one is you don't have to live in the state that you invest. It's more a conversation about investment purchase, and I'm going to explain also about DSCR. So you don't have to live in the state that you invest in. And you don't have to make six figures, as we were just speaking about income, to buy an investment property. So let me show you how my friend Cedric is doing that. He currently lives in California, where the average price of homes, is sky high. Actually, San Francisco, Los Angeles, he lives. But he came across an opportunity, actually several opportunities in different states. Cedric, I hope you're okay that I say it's Ohio, but I'm sure there are more opportunities for everybody. And he is purchasing this property for $75,000. That's right, $75,000. So the house is 3 bedroom, 1 bath. You can see the pictures. I'm not going to show his property, but you can see the pictures where it needs some new fresh paints and flooring, right? But 75,000, even in Atlanta and Florida, it is very challenging to find this type of deal. So most people don't realize that when you buy real estate in a state that you live in, may not be the best opportunity. You may have to look outside. We have 50 states and 50 different markets. Even within one state, there are different markets. So, and there are some states where there are properties that are less than $100,000. Sorry, distractions here. And because Cedric is using what's called a DSCR loan, which is a debt service coverage ratio, he doesn't have to show income. So I'm not asking for his income, I'm not asking W-2s, tax returns, none of that. I'm really just looking at credit, looking at his assets, and we do have options for first-time investors. So know that that is something that can be done. More limited, but you got to start somewhere. So that is an option with some DSCR programs. So with the DSCR program, the property is the one that qualifies based on itself. So that means the rental income over the debt. So the deal really stands on its own. Yes, credit, yes, assets. But in order for the deal to work, we have to look at the property cash flow. So the big lesson here is real estate investing doesn't really have borders. You can invest in different states. And myself, as a licensed loan officer in Georgia and Florida, I can also finance some DSCR loans in other states where a license for those programs is not required. So that means opportunities are not limited to your backyard. They're not limited to where I'm licensed either, for those specific programs like DSCR, because it's more of a business purchase. So if you're open to exploring markets outside your state, you can most likely find deals. Cedric is finding more than one deal and is investing in this current market. So look for the right opportunities. And I'm just gonna say about that. Yes. When you buy as an investment, when you buy to move into the house, there are other criteria that you're looking at. You're looking at kids' schools, you're looking at job distance, driving, and all those. When you're buying for investment, the numbers is really what matters. Is this property going to rent easily? Are you going to have a positive cash flow? And if it's a positive cash flow and not have your property manager because it's long distance or out of state, you don't factor all those. If it's a condo because it's cheaper, keep in mind the HOA is also part of the calculation. So my question to you, would you, now that I shared this with you, would you buy an investment property that's outside of your state? If yes, go ahead and drop it. And I would love to see who's really thinking bigger and outside. I'm laughing as I said, who's thinking bigger, greater, and outside the borders. In another word, oh my gosh, why is my tongue speaking words that are interesting? If you follow my drift. Okay. So I'm super grateful for my friend Cedric, who is actually also from French francophone. So he's a French citizen um, living in the US, and he is investing and taking opportunities to grow his portfolio. Okay. All right. Well, I move to the next and last lesson or case study. So DSCR, which is that debt service ratio that I've mentioned, debt service coverage ratio. DSCR is one of the easiest loans to qualify for investment property. But don't get fooled by the fact that it's easier. And also, if you're going to occupy the property, do not buy a DSCR. That's fraud. So you want to make sure that because you're going to be signing documentation stating that this property is only for the purpose of business. A lot of times, the DSCR programs, a lot of times, most of the time, if not all the time, all the investors will ask for, I don't like to say general all because there might be some nuances. They'll ask you to actually sign a form that you cannot even rent it to a family member because a lot of times people will invest and say, well, I'm going to buy this and it's going to be for a family member. When you're signing, you know that you're signing and a disclosure is given to you and it's you signing it. So read what you sign. When you are buying a lot of times with DSCR loans, you are required to keep this property as a rental to non-family members, not yourself. Okay, so that's the purpose of a DSCR loan. It's making it easy because it's a cash flow, it's income producing. So when I say it's easier than for an investment property or just in general, but investment properties, there are some loans that are investment where you still qualify with your W-2 and your tax return. That's what your conventional, traditional loans. So in this case, we are not looking. I do not want W-2s, or I don't want to know what you make. I don't even put where you work. Okay. Um, so the property is purchased or the financing is done based on the property itself. Um, the reason why I want to go a little bit more in detail here is a lot of times you can find a deal where either the property is already rented or the person who's selling it to you, you look in yourself and you say, wow, I can rent when I make those repairs, I can rent this property for let's say $2,500. But know that the loan is not approved by what you think you can rent it for, not by just what you currently know it's rented for. It's also based on the property rental comparables cash flow. So that means the same as when we do an appraisal, the appraiser compares to other homes in the area. When it comes to the DSCR loan, the appraiser is also looking at what other properties are renting for in the area that are similar. So let's say you come to me and you say, oh, I can rent this property for 2,500, but then the appraisal comes back and it's $2,000. But the mortgage payment is still 2,000, but you're totally fine. You could still have a change in your loan term because at first we did it based on having such a positive cash flow. You were making $500. And that is something to be very careful about when you're making your calls to lenders and comparing interest rates. So you can start with an initial rate quote where we quote you an interest rate and any discount points or fees, right? But then the appraisal comes back and the ratio that drives the pricing is not impacting your actual loan term. So usually a DSCR of 1.0, meaning it's the $2,000 is the mortgage, $2,000 is the rent. Again, you're totally fine. And the pricing is what it is. But then if it's at 1.25 or 1.5, meaning you have a cash flow that's positive and over what he rents for, then you get better interest rate terms attached to it. But now the flip side also happens if it's below 1%. So like some programs, we don't even really look at that DSCR calculation as long as we know we have some type of cash flow, but it's still a lower attraction to the terms because now it's not as the cash flow is not helping in providing a better term. So be careful when you are actually asking lenders to quote you based on what you think you can rent versus what an appraisal will come. And some lenders may be very aggressive at first to how much the interest rate can be, thinking that it would basically remain exactly that, but the appraisal will trump. Gosh, Kristel, with the words. The appraisal will actually change potentially the terms of your loan. And the other thing I want to add when it comes to, I don't know why I'm talking so much in this realm right now with this. I promise this is just straight copy. So the DSCR is an investor-friendly type loan, but the numbers really matter when you start and be open to there could be some changes based on the actual appraisal. And a lot of times your DSCR loans are going to require month reserves, so whatever the monthly payment, 3 months to 6 months. The other part I wanted to add is if a property is leased, it's a particular pricing. If it's not leased, sometimes you may have to change where instead of putting 20%, now you may have to put 25% down or even less, depending on the investor. But there are an array. This is not like conventional and FH is just like one rule. So many investors, or I'll call them lenders, who would have their own criteria for their loan. So it's very important to cover all this upfront with your loan officer. So DSCR, yes, is definitely investor friendly, but the numbers have to be real. And aggressive rent can show aggressive, amazing numbers, but then in the end, you're already close to closing and you get an appraisal, this can impact you. So just be open to that. um, that the changes can happen based on the appraisal. And what else can I say? Well, that's basically it. So just want to say thank you for the investors are reaching out to me for I've just closed one on Wednesday, I think it was. I think it was when Tuesday, actually on Tuesday, we closed with this repeat buyer. And I also love working with investors because they're looking at opportunities. I am definitely like I've mentioned in the past, house hacking, like really programs where or investing into real estate where you're getting an income, not just paying for a mortgage. So any questions on DSCR? We'll love to hear from you. Um, in my bio, you'll find my calendar. Book a call with me. Any scenarios that I can run for you with you and for you, I'm here to do that. Okay. So now let's take a quick deep breath. As now I get to share with you health. So um, I recently, actually it was yesterday, went to a medical visit. And I had not been told this before. But there's a possibility that the fibroid that I have probably was already there and just never really brought to light until I started having, and sorry guys, some very heavy menstruation, which has brought me to become anemic, which basically by the amount of loss that I was having. But interestingly, the reason I started this live by saying I usually don't talk so personal, but I said I'm gonna get to more and more raw when it comes to energy and health, like what I'm going through the experience. So, as an energy practitioner, I know of different meridians. So you've heard acupuncturists, they place needles in different places in your body, but they actually follow a line based on where your spleen is, where your the heart, like all the different organs and the different meridians. Okay. So I've studied and I practice probably not as much as I should to strengthen my meridians, but during my cycle, I would release any stagnation of in the meridians, meaning in the channels of the body, and strengthen it. But I've now have about 7 centimeters fibroid that is causing me to feel a little bit weaker, not a little bit, a lot weaker, because I've got become anemic. The reason I'm sharing this is as I'm having conversation with partners, realtors, or even clients or recurring clients, this is how things are going. When people ask me, I'm very genuine. I'm not going to share with everybody. That's true. But sometimes there have been some relationships and conversations that are a little bit deeper. That's like, well, I'm experiencing this. And then the conversation opens, me too. Or, yes, I've heard of this. And of course, there is the opportunity of removing the whole uterus and everything. I'm like, wait, what? We're going to do what to Kristel? So I got to double think that, which I said to the doctor, no, thank you. We're not going to go that step yet. And a lot of friends, not a lot, but the ones I've spoken to is like, oh my gosh, I've never felt any better. And I get that because you stop so much of the bleeding. But as an energy practitioner, I'm taking a little bit more time because that's the womb. The womb in the chakras is really the place of creation. So removing that versus actually first healing it in the space of, okay, why do I have that? What emotion triggered that? Now, for some people, it's like, what the hell is Kristel talking about? And if it's not for you, fine. If it's curiosity, stay. If it's like, wait, I want to know more, stay. So I actually last night did an energy session, which was where this could have started. And very often it's an emotion attached to a lineage, like a parent, or anger, frustration about certain things. That's the reproductive system. So my brain, my mind, my emotions probably got triggered in a shock at some point in my life that subconsciously created and it was dormant until now it's like you got to pay attention to me. The reason why I think it's actually very interesting is happening right now is a lot of energy practitioners are doing womb healing, meaning people talk about the chakras. If you're familiar with chakras, it's like you bring energy to chakra, you do breath work. There's so many modalities, but this particular one is focused on the sacral. And I think I have two. Two trainings coming up for that, which is basically to heal. So I'm not saying I will remove or not remove, but right now I am doing the inner work, right? I'm not just letting somebody come in and just scrape it for me. It's actually me doing the inner work of where I have had some shock, some emotion, some whatever comes up for me to release. And I called it to the light. I know this is very foreign for a lot of you guys. And trust me, I'm smiling. I'm like, oh my gosh, you're being judged, you're being talked about. You're like, what the heck you talking about, Kristel? Well, this is Sacred Home with Kristel. And this is a sacred place for me to share. Um, because you're probably experiencing something very similar. You probably know of someone who's experiencing this. And although it may not all be the same, definitely go to a doctor, go get your checkup. But there are also, I always think that with the medical practice, which stops the bleeding, there's also the support and the healing at the core, which is why I love acupuncturists, because acupuncturists don't just put a band-aid on something. It's like, well, let's just fix this. So actually, let's see where the energy is stuck. Is it stuck in a meridian, meaning in the flow of the energy of your body? Is it stuck in a particular place, which is why you have a mass? Okay, there are some, you can even Google this, where emotions based on the physical disease. Disease is really where the body is not at ease, and you can start seeing where what it means. And I've already started doing this work, specifically when it comes to fibroid. And the practitioner who helped me with this, Judy, if you hear this, um, when it was triggered, I believe, and I feel it was really triggered as far as heavily by a breakup in a relationship. So that it's not a blame, it's just a recognition that this really is like, okay, you got to face this, you got to heal this, you got to take care of this at its core. And even though it was dormant to me, because I wasn't even aware that I had the fibroid, now that it's there, it's like in my face, and it's there for me to love on it and love on the opportunity to heal at the core of where it originated. So there are different ways to go about that. That is just what I'm going through right now. So that might be a little bit I'm not going to excuse it. That's why sometimes I'm late on the live. So I'm like, okay, I got more time, and then I'm moving a little bit slower than normal. So I'm definitely taking a lot more iron to increase my vitality and my ability to rebalance my body. So just wanted to share that with you. This morning I asked, what is that section is going to be about? So there you have it. And is there anything else that yeah, the word that comes up is don't resist it and don't be angry at it. On the contrary, whatever illness, that could be any illness that you have. It's when we actually resist, it actually persists, right? But when you actually embrace, meaning accept, this is what I'm going through right now. What is it teaching me? What is it showing me? Why is this happening for me? A lot of you may have already heard those type of phrases to repeat to yourself, but don't just repeat it. It's like, I'm truly interested. Why? Why is it showing up now? And it's showing up at a time that I'm still back home in the Caribbean, where the lineage of family and a lot of women have experienced fibroid. And a lot of times we go and just get them removed without really understanding what could be the element that is actually impacting this. So that is a journey I'm on right now of doing the womb healing. Again, I am not dismissing the fact that I may have to just go ahead and get it fully removed. But we're going through another type of treatment to help me, but also gives me time to go through the energetic healing, meaning the emotion, the mental part of it, and the physical part of it. So that's what I have for you guys. So mortgage, and then transitioning a little bit about other aspects of life. And I'm trusting this information finds you well. We'll love to hear from you. Feel free to message me personally or leave a comment. Thank you so much. Have a great one. Wait, you can barely see my coffee. Halfway through. Have a good one.